If you've been thinking about buying or selling a home in Frisco this year, then you are certainly not alone. But before you make any big decisions, there are some major market trends that you need to know about. Predictions regarding mortgage rates, home prices, and supply levels are shifting. And the strategy that worked last year might not be your best move in 2025. So in this video, I'm going to break down exactly what's happening in Frisco right now and what it means for you so that you can make the smartest decision whether you're buying or selling. So let's dive in. Hi, this is Andrew with the Andrew Smith team, eXp Realty here in Frisco, Texas. And obviously my assistant Bailey behind me here is taking a nap. It's one of those days. But anyway, the first thing I'm going to be doing here with you is share my screen and go over the latest market trends, specifically paying attention to the home prices here in Frisco, what the inventory levels are doing, overall supply, as those directly impact prices. Also going to look at what the trends are with regards to days on market. Then I'll show you the latest expert predictions with regards to mortgage rates. So the screen that you're looking at right here is taken directly from my weekly market report. If you'd like to get a copy of this report delivered to you each week, in the description below, I have a link where you can sign up to receive it. And every single week, you'll be having direct access to this exact same information. First and foremost here, I'm looking at the median list price. There's a couple of things I want to point out here because there's been a lot of talk and speculation about, are home prices going to decline? What's the future of home prices here in Frisco? And honestly, home prices are basically the culmination of what's happening between supply and demand. And I personally don't see home prices going down, and there is nothing in the data to suggest that is going to happen. And I'm going to show you here exactly why. But saying that, I also don't see home prices increasing rapidly over the coming year. It's evident as we look right here. So I'm zoomed in right here, so we're only looking at just over the last year. If we go back to February 23rd, 2024, so just over a year ago, you can see that the 90-day average list price was $743,000. If we come all the way here to February 21st of this year, we're at $752,000. So it's a difference of $9,000. It's an insignificant change, less than 1%. So that's telling you that compared to last year, prices are essentially flat. The other key thing on this chart to point out is look here how sharply the increase in prices went up. And I'm looking at this solid line because it's the 90-day trend line, whereas this dotted line is the 7-day trend line. So it's a lot more jagged, more volatile. But look at the curve, right? Look at the pace of appreciation that was taking place through the spring last year. Look at this year. Look how much flatter that trend line is. It's still trending up, and it shows that we have bottomed out for the year, but it's not increasing at the pace that we saw a year ago. So why is that? A lot of it has to do with supply. So let's go take a look at inventory. As you can see here, again, if we go all the way back, this time last year, there were 276 homes for sale in Frisco. Here we are this year, there's 488. So there's substantially more inventory, more supply than there was a year ago. Now, it's nowhere near where it was pre-pandemic, so the idea that we've got this flood of inventory building is just not true. But as you can see, normally at the beginning of the year, as we get towards the end of February, we see inventory build rapidly. Spring is the traditional time for buyers and sellers to be out. It's the busiest time of the year. Look at this year. Just like with pricing, you've got supply relatively flat. Now, saying that, I have seen more homes go up for sale. I know in my own neighborhood over the past 4, 5, 6 weeks or so. But when you look at Frisco overall, back in early January, 481 homes. Here we are at the end of February, 488. So it's relatively flat. So we haven't really seen that trend line increase yet. But just due to the fact that there's more supply than there was a year ago is one of the reasons you're not seeing home prices increasing quite as fast. So what does that mean going forward? Well, a couple of things to look at. With more homes on the market right now, homes are taking longer to sell. The days on market is averaging very, very close to 100 right now. So 3.5 months roughly on average for homes to sell. So they're definitely taking longer. So as a buyer, if you see something come up, doesn't necessarily you have to jump right away. But keep in mind, the homes that offer the best value and the best condition are still selling very quickly. But that's what you're looking at with days on market. Lastly here, this is a trend that not many people follow that I think is really important. This is properties with a price decrease. So this is sellers that have reduced their price before going under contract. As you can see here, this trend line continues to decrease. Took another drop this week down to 43.44% of all listings. Why is that important? Why does a decrease in the number of homes reducing their price matter? It shows strength in the market. It shows buyer demand. If sellers are putting their homes on the market and they're not getting offers, what do they have to do? Reduce price. If you are in a market where supply is relatively flat, as we've seen, we are expecting that to trend up, but then you also see that the number of price decreases is going down, it's showing that the buyer activity is still pretty resilient, even in the face of higher mortgage rates. So decreasing number of price reductions coupled with a slight increase in where prices are going is showing relative stability in strength in our market right now. Now, speaking of mortgage rates, let's take a look at the latest predictions with regards to those. All right, this what we're looking at right here just came out from U.S. News, and it's now saying that the 30-year fixed mortgage rate is now expected to stay elevated between 6 and 6.5% for the next 2 years. Just a couple of months ago, economists thought it would fall into the 5% range by the second half of 2025, and that's just flat out not happening. They're now expecting mortgage rates to stay higher for longer. Here's the latest projections as of February 20th, and this is looking at what Fannie Mae, the Mortgage Bankers Association, Wells Fargo are all saying about mortgage rates. So you can see they're all well into the sixes when the average of all three here, nearly 7% for quarter one, which is proving to be true. 6.8 cent in quarter two, 6.68%, then 6.53%. You can see that any talk of rates dropping below 6% are gone. It's not going to happen this year and probably not in 2027 either, based upon what we know currently. So what exactly does that mean for you if you're planning on buying or selling? For buyers, we know that mortgage rates have played a huge impact in whether or not buyers intend to buy. After all, affordability has been challenged. It's important to remember that with regards to mortgage rates, if they're not going to drop much in the next couple of years, but home prices are projected to continue increasing, that puts you in a tough spot. I understand that. You've got to decide what is best for you. Remember, when rates do come down, a lot of buyers are going to come flooding back into the market. And what's that going to do to prices? It's going to push them up even more. So, a 1% reduction in the mortgage rate, basically, it's the equivalent of a 10% price reduction. And that's where it really depends on what it is that you're looking for. Now, new construction continues to understand this. They have been aggressively putting all of their incentives into mortgage rates. For instance, Highland Homes, Shattuck Homes, two of them in particular, they currently are offering 4.49% rates for the first year, then 5.49% fixed rate for years 2 through 30. Think about that. As we just showed, the experts aren't predicting rates to get below 6% for the next 2 years, but you can lock in a 5.49 loan for life with Shattuck and Highland right now. So if you'd like more information about that, please don't hesitate to reach out. There are restrictions on what they're offering, and I've got all of those details. Overall, as more homes come on the market, or as there are more homes on the market than a year ago, you have more negotiating power right now as a buyer. But waiting might end up costing you. As I just showed, prices aren't crashing. and there's no indication that they're coming down. So if you are in the market, it might be worth considering, or at least getting ready to buy sooner rather than later. It's always possible to get that rate down. Rates can be refinanced later, but as more buyers enter the market, it is going to make more competitive and more challenging situation. Now, how about sellers? How about all of you out there that are thinking about selling? One of the things from a selling standpoint, the mortgage rate lock-in effect is something that's been real. It's been a real challenge. After all, if you've got a rate around 3 and 3.5%, unless you have to move right now, why would you? With builders offering the incentives that they are, it can increase motivation, shorten that gap, if you like, between the two. But still, understand that demand could rise later this year. So if rates drop and more buyers come into the market, that is going to be better conditions for you as a seller. But pricing correctly really matters. As you've seen, you can't just throw a house out there right now and expect it to sell right away. Buyers have more choice than they've had in the last 5 years at least. So those homes that are priced correctly and are set up correctly are the ones that are going to sell the fastest. Updated and moved in ready homes sell the fastest. That deferred maintenance, you're not going to be able to defer. You are going to have to take care of that. So you need to make sure that you're able to stand out, especially with more homes being for sale now. And again, if a lot of sellers do the same thing and wait for rates to drop, then inventory could start to grow much faster later in the year. If that happens, there's going to be even more competition. So again, setting your home up correctly up front is really key. And if you need help with that, I invite you to reach out. In over 20 plus years doing this, I've seen these market cycles that go up or down, homes that sell immediately and homes that take a long time to sell, and know exactly what needs to happen to position your home correctly to attract as much attention as possible. So whether you're buying or selling, what's the best move for you? It really depends on your situation, and everyone is different. But one thing is clear: being proactive puts you in the best possible position to win. So if you're thinking about buying or selling in Frisco this year, let's talk about it. Let's come up with the strategy that makes the most sense for you. I always offer everyone a free 30-minute consultation. There's no obligation whatsoever, just to talk through your situation and see what might make the most sense. Alternatively, if you scan this QR code, that's going to take you directly to that calendar as well. Let's talk through your situation and see how I can help you get in the best position to buy or sell this year. Thanks so much for watching. If you have any questions about Frisco or the immediate surrounding areas, please don't hesitate to reach out, and make sure you stick around because I know you're going to love the video coming up next.